Welcome to the Rennie Podcast. I'm Ryan Wyse, Market Intelligence Manager and Lead Analyst with Rennie's Intelligence Division. Ryan Berlin will not be joining us today. He's off on a well-deserved vacation. So while we're running dangerously low on Ryan's today, we do have an Amy, Rennie advisor for the past 7 years, all of your career as an advisor with Rennie. You have a successful resale business, but you're also sales manager on Grosvenor's Brentwood block. Is
That's
that right?
right. Yeah. I started in Rennie with this brokerage in 2018. Kind of did the interview process when I was first licensed to see who would best align with what I wanted within my career for real estate. And Rennie just kind of hit that mark. You know, they kind of dabbled in the development industry and then also the resale. So you could have best of both worlds.
So you've done quite a bit of project sales. I've seen you've been on stuff on the west side of Vancouver, downtown, Coquitlam, Metrotown, and now Brentwood. So you've kind of done it throughout the region.
Definitely. Yeah, all of them really played a real pivotal role of where it was going to take me next in real estate. Shannon Wall Center in the west side was just such a elevated top tier product to sell. So that kind of gave me a little bit of like the luxury market and dealing with the luxury buyer there and that demographic. And then it pulled back into kind of Metrotown, which is what we're seeing more of the typical buyer demographic in these sub areas like Metrotown, Surrey, Coquitlam, all of them just expanding so much. You can definitely see it when you're on a plane leaving Vancouver, which we love. All the pockets of high rises. It's so neat to see. Yeah.
Awesome.
Yeah.
So on today's episode, I want to start with a theme that we've talked about quite a bit on this podcast, which is that macro-ality, a term that we've kind of just made up, is more important today than seasonality as it relates to the resale market. Then we'll talk about the pre-sale / new home segment of the market and what's going on there right now. We'll get into the Q2 numbers and some of your insights and what's happening at Brentwood Block. And then we'll talk about those aforementioned macro factors that have thrown seasonality for a loop, like the jobs data that just came out last week, some of the consumer confidence metrics, and the recent Bank of Canada decision. So with that, let's jump in. So in July, we had just under 3,400 sales for the Vancouver region, which is the most of any month this year. So sales peaked so far this year in July. That's only ever happened once before in this region in 2013 of all years. And the typical month-to-month change from June to July is a 12% decline in sales. So while sales were still well below average, 22% below average, that was the closest average since January. Typically we see March, April, May as the busiest months of the year in this market, but March and April in particular were really slow. May was as well. And things have started to trend up. So I guess my first question to you is, has your phone been ringing a lot more in summer than it was in the spring?
I would say for some reason more focus with sellers right now.
Okay. Well, there is certainly a lot of inventory in the market. We'll get to that in a minute.
Yeah, definitely. Buyers, I mean, they're very skittish. Everybody, it's literally like the analogy I like to put it, it's the high school dance, like grade 8, all the buyers are on one side, all the sellers are on the other side. Who's going to make that move, right? So I'm more kind of managing seller expectations right now. They're not getting the price they want, but yet they need to sell. And then, it's just the copious amounts of open houses, showings. We're doing what we can marketing wise to get the buyers through the door, but there's no offers. So it really reiterates the buyer confidence and sentiment more so than ever that we need some re-injection of confidence, be it a quarter point drop. And that's not going to make a huge difference on their mortgage payment. But if it's going to make a difference on their confidence, that's what's going to get them off the fence.
Okay. So there's still just under 26,000 listings, total inventory on the market today. So listings fell between July and August when typically they kind of plateau in the summer, but at like 3%. So we saw another anti-seasonal change here with a small drop in inventory, first drop of the year. But listings are still 50% higher than average. So there's still so much inventory. And like to your point, your sellers are still competing really hard. With this uptick in sales, like, do you think there's a few more buyers out there, or maybe there's a little bit more of meeting in the middle between some sellers and some buyers as expectations get adjusted?
I think there's a bit of both, but I had a lunch meeting recently with a local notary, and I just want to pick her brain, right? Because she's doing the completions. She's, transacting, and she sees that side, the final stage, right? I'm like, who is transacting right now? And it's 80% first-time home buyers. Even with us at Brentwood Block, we are seeing definitely the uptick for first-time home buyers, capitalizing on those new policy changes that they have for the GST exemption, PTT exemptions, like all that kind of stuff. And that's even translated onto how deals are even written.
So with the PTT exemption, that's up to, I believe, 1.1 million. The GST exemption is fully up to 1, laddered down up to 1.5. So you're seeing a lot of those first-time buyers coming in at like 999, 1099, like in that ballpark.
Yes.
Okay. And that's sort of moving the needle a little bit for them, whether it's sort of 2% less on PTT or 5% less on GST. Yeah.
Yeah, huge savings if it's $1 million.
Yeah, absolutely. Okay.
I know that's not the typical budget for most first-time home buyers, so we're definitely still seeing Bank of Mom and Dad leaning in and then helping out with the, initial deposit. That hasn't changed. Hot market, slow market, we definitely still see that help from the parents or family or wherever.
So you brought up pre-sale, so let's just jump into the Q2 numbers. So there were just over 2,200, call it new home sales. Like, it's not a true pre-sale market right now because so much of the activities and completed and under construction inventory. But 2,200 sales, that was up 55% from Q1. Q1 was the lowest quarter we've ever seen in this market since our source data, Zonda Urban, started tracking. But Q2 was still 29% last year. So we saw a huge increase, more than 50% over Q1, but it's still below average. It's still less than last year. At the same time, inventory is at an all-time high in that new home market at more than 16,000 homes available. So there's a lot of competition out there, but there are a few more deals happening. You already mentioned first-time buyers. Like, who else is walking through the door right now? I imagine investors are still kind of sidelined, but it's more so the end user crowd.
Absolutely. You're bang on with that. So investors definitely have leaned back. There's just a lot of additional policy changes for investors to, give them lack of confidence in investing in the Vancouver real estate market. Most of our buyers for Brentwood Block have been end users, full stop. So either they're upsizers or they're moving out of neighborhoods that didn't quite pan out for them.
Okay.
It's changed. Specifically, downtown hasn't really recovered from COVID. Those buyers are coming kind of more.
Okay. Are you seeing anyone come back from the valley who maybe moved east in COVID, who thought that they could work from home full time, and then now they realize they can't? They want to be next to a SkyTrain station again.
So during COVID, they valued the space. Langley really blew up during that time.
They didn't care about the commute because they didn't have one.
Yeah, they didn't have one. But now that we've kind of come out of COVID and we're kind of getting some normalcy back in our lives, they're now gearing back to amenity-rich neighborhoods. So like the Brentwoods, the Surrey, the Metrotown. Yeah.
Okay. So one of the things that we've been tracking the last few quarters that's come up a lot more, and one of the reasons kind of calling it new home market instead of pre-sale market, is how much completed inventory there is. So we started tracking this at the end of last year. We were getting up to 2,000 completed and unsold condos in this region. As of Q2, now we're up over 2,600, around 2,650. And there's a lot more coming of unsold condos in under construction projects that'll come over the next couple of years. And there haven't been a lot of project launches this year at the same time. So there's been, if I look at concrete towers, sort of your competition, there's been 9 this year, about 1,500 homes. So that is on pace for the fewest on record. But it's quite different buying a completed home or an almost finished home versus like a more true pre-sale. Do you find that your end user buyers and prospective buyers are shopping the different segments? Or are they more sticking with like, okay, I need a home delivered around this year?
Yeah. I mean, it's a great question, although it's very unique to the buyer.
Right.
So when you're looking at pre-sale, your considerations are timeline.
Mm-hmm.
You know, do you need that buffer to move, sell, and then move into your new home? Most end users will look at resale because they want to know currently where prices sit in comparison to pre-sale. Pre-sale is more future value too. And then depending on the type of location, it just plays all into it. Like with us, Brentwood block, like Grosvenor has such confidence with the future of Brentwood and where it's going to land in about 5-10 years that they're willing to, you know, submit for BP and have that confidence in like digging. And I mean, they're not a homegrown developer. They stem from London, 365 plus years of doing international development. So they're not new to the game, and they can kind of forecast those really pivotal communities that have that future grounding.
So on that topic of like true pre-sale versus completed and under construction, Brentwood Block recently started construction. So I was going by on the SkyTrain the other day, and there's a whole bunch of excavators digging up that site. So it's not a true start on the CMHC front yet, but their progress is happening. You can see it from the train, from the street. How important is that to the prospective buyers that are coming in, where, you know, there's been some tough headlines about receiverships and projects not moving forward, that they can come and actually see progress on the site? Is that something that buyers are talking a lot about?
Absolutely. I think that's paramount in their decision making, especially when it comes to pre-sale. You're not necessarily walking through a completed home, whereas a completed home, obviously it's there, right? With pre-sale, it's an envisioning. You're buying into the future of that building. So yes, we filed BP back in April, which is a huge milestone in pre-sale development process, right? That means it's progressing, and we have a phase one that's about, the full entire block is about 8 acres. Phase one is half of that. I think it's safe to say that we are the largest site that's being shored. If not in just Vancouver, I would say Toronto's pretty hurting right now. So I'm almost safe to say Canada, but I might have to bet that.
I'll go double check those numbers after.
Let's bet that. So yes, it plays a huge role into buyer confidence because our site is luckily located on parcel that we're building on. So it's easy enough to walk them at the end of the block and see that huge pit. And it's, you know, giving that further confidence for them that even if they put down a deposit, that they're going to end up with a finished home at completion. We are saddened when we hear about receiverships, but there's also more color to that, behind that. You know, what happened that kind of put that development in receivership. There's, you know, it's easy to plaster a very blanketed statement and a hot headline like going under. You know, it's not great for our industry. We want the wins for everybody because there's enough room for everybody. But now we've become like the outlier because we are progressing. We're moving along, and we still have, you know, homes that can be bought.
So you mentioned that, you know, with pre-sale, you're buying a vision. And I think that with a master plan community in particular, you're really buying the vision. So the first phase of a master plan, which is what you're selling right now, you can't see the other buildings in the development, and that the buyer has to picture what everything is going to be. And so I think any progress that they start to see on the site can help them sort of bring that along.
Yeah, 100%. I mean, I feel like I've only been in this since 2018. 2018 was relatively a really hot market for pre-sale as well. So I think the elevation of the sales tools that you have to include nowadays, buyers are so much more knowledgeable, and the sales team has to be even more knowledgeable.
For sure.
And updated with their policies and any changes like that could affect that purchaser, be it like first time home buyer or all those things. You just have to be in the know now, which I like kind of a downturn market if, you know, we're still in one. I think we're kind of getting out of it, but I like it because it weeds out the people that don't necessarily shouldn't be in it. Because buying a home is huge and you need like very clear guidance and correct guidance in that purchase. So, you kind of see it like the people that bought in 2018 that were ill-advised are kind of feeling that, 4 years down the road, right? We don't want that for our buyers at Brentwood.
Yeah, you need your trusted advisor.
100%. And like the agents too, right? Like that are out there. It's easy to get into a hot market. I mean, I got licensed in a very bad market, which I feel like played in my favor because I had to learn because it's like it was a struggle for everybody, similar to like now, right? It is a little bit quieter, but with the quiet times, you can lean into how you can dial up your own business, kind of fill the holes that you can't necessarily do when it's very busy. It's just changing how you look at a slow market versus, oh, it's doom and gloom, right? Yeah.
Awesome.
Take a vacation. Reset.
So great. I want to talk about like all of the other stuff that's impacting real estate, all of the macroeconomy stuff that is part of the reason why this year has been so counter-seasonal. And I think we should start with the jobs data that came out as of recording last Friday. Last month, we talked at length about how volatile the job numbers can be month to month. And we made a big point of saying, don't overread into one good month's worth of jobs data when we added 83,000 jobs in June. So here we go. We get July data and doom and gloom headlines. We lost 41,000 jobs. People were surprised. So again, we need to say, don't read too much into the month-to-month volatility. So one of the things I just quickly did to get ready was look at the past 3 months. Pre-COVID, 3-month moving average was a much better way of looking at this stuff. Over the last 3 months, we've added a monthly average of 17,000 jobs. Okay, not great. Labor force grew by about 21,000. Okay. Unemployment rate is where it was 3 months ago. Labor force participation down a little bit. Employment rate down a little bit. So I think it's not as dire as the July data would tell us, but it's also not great. We've got a pretty soft labor market still. And it kind of adds up to this, there's still a lot of uncertainty out there. There's not a ton of hiring. And I think from an economy perspective, we still have a pretty weak labor market. And from a Bank of Canada perspective, they're still open to the potential for another interest rate cut. But as we kind of look through the Bank of Canada's last announcement on July 30th, they talked about how uncertainty is elevated. Worst case tariff scenario was avoided, thankfully. And they there's I think a good quote from their last release. I want to just throw it at you here. If a weakening economy puts further downward pressure on inflation and the upward price pressures from the trade disruptions are contained, there may be a need for a reduction in this policy interest rate environment. So they're saying they're totally open to another cut if we need one. And I guess I want to circle back because you made a comment about buyers in the Bank of Canada before. Like, how much do you think a quarter point cut, if we get one in September or beyond, really matters to buyer psyche right now?
I think definitely it would trigger not a hot market, but definitely stimulate the buyer side for sure. Just that quarter point, like I said, it's not going to make a huge difference on your mortgage payment, but that confidence will be like enough for a buyer to be like, okay, now is the time to jump in. Because if you think about it, like how long have we been in a downturn? Like a soft kind of.
Since rates ratcheted up in mid 2022.
Exactly. So that buyer activity has been pent up like a dam until now.
3 years of a challenge.
That's insane.
Yeah.
And typically it's funny enough, like I've seen this like a few times now where buyers just want to jump in all at the same time. I don't know if they get together and have a meeting, but it just, and that's where that, that hot market in Langley where it just like sight unseen, you're putting in offers and you can't even like go in for a showing. Multiple offer situations. I don't think it'll necessarily get to that, but it will stimulate a lot of people off the fence for sure to pull trigger and capitalize on all those GST exemptions and the PTT. All that just makes it a really good environment to buy if you fall into that first time.
So between now and the Bank of Canada's next announcement on September 17th, There's a lot of data releases. I think there's no point in making a prediction about what they do right now, other than to say they're open to it. So between now and then, we get July and August inflation. Those are obviously very important. Inflation's still a little sticky right now. More jobs data, the August jobs data. We get another GDP release. We get financial flow accounts, which has important lending and debt measures. So I think it would be foolish to try and predict, what they're going to do when their decision is based on so many of those upcoming data releases. But I think the door is definitely open, and they're signaling a willingness to cut maybe one or two more times more in this cycle, which there's a lot of debate about that right now. There's a lot of voices out there who think that those data releases will show that it's not as tough out there in the labor market as something. And we're actually already at the end of this cutting cycle. So I guess, time will tell, but there is in some circles a thought that they won't cut at all. And this is what, where rates are going to be for the foreseeable future. So if, that has an impact on buyer psyche too.
I also feel like if they didn't cut the rates, we've had a hold three times now. Three times. So at some point you just kind of, it's normalized, like it's just kind of the thing, just like how Trump is tariff this, tariff that, like we're almost numb.
Yeah.
And then you just have to continue based on like what your buying needs are. Like, do you need to buy? Then you don't have the time on your side, right? If you have time to wait, you're living with your parents or you're renting, you could just wait it out, right? But I feel like after 3 holds, you're kind of accustomed to that being the baseline now.
Yeah, and I think so. Like fixed mortgage rates have mostly held up. They've moved a little bit. Bond yields went up for a while. They've come back down. But I think, sort of the low 4s, high 3s is where we can expect fixed mortgage rates to be for the next little while. So part of that comes with, or certainty comes with that a little bit, I think, as well, which I think the general public is craving a little bit of certainty right now. Knowing where things will be in 1, 3, 6 months is something I think we'd all like a little bit more of. And we've seen, if you look at Conference Board of Canada data, consumer confidence bottomed out in April in the middle of all the Liberation Day nonsense. And it's been steadily rising since then. So we've had both in Canada and here in BC, a few consecutive months now of rising consumer confidence. So there are, some signs that consumers are either okay with where things are headed or just feeling like, okay, we avoided that worst case scenario. And even if we have some tariffs, Canada's effective tariff rate is really quite low because of the CUSMA exemptions. And so people are feeling marginally a little bit better. And so, we'll see as we head into fall whether this is the beginning of a busier market or whether seasonality is completely out the window and we don't have a big fall market. I mean, time will tell. Here we are, it's middle August as of recording. Summer's almost over. But again, there's a lot of economic data to come that I think will inform, where we go from here, how much of an impact some of the tariffs and for us counter tariffs have had. There's also in the US side, there's a lot of CPI data coming out. There's a release tomorrow as of recording that probably will show tariff impacts on US inflation. So we're entering a pretty interesting time on that front. And I think we'll see, we'll get a lot more clarity on some of those impacts over the next little bit. And that will give us some more clarity on where the Bank of Canada will go in September and beyond. Okay, so we have a recurring segment we like to do. We call it Beneath the Headline, where we cherry pick a real estate related headline that we think could use probably a little bit more context. So I want to read a headline for you, Amy. Bank of Canada offers no lifeboats for drowning mortgagers. And this article is all about the Bank of Canada interest rate hold on July 30th. And it's a big discussion on where rates are going and how they're probably not going to move very much, even if the Bank of Canada cuts, it will only be a little bit, which I agree with. And it's a decent analysis on rates, but the headline is all about drowning mortgagers, which kind of is a pretty broad brush to paint with.
No, I agree. It's kind of reiterating that mob mentality of the flashy headline that's like fear mongering. Mm-hmm. People are just interesting in their psyche of what they gravitate to in terms of news, because I typically don't really watch the news anymore because it's very doom and gloom. It's only reporting the lows. Very few times you'll have a headline with like some wins or the highs.
And so the article itself like is a pretty reasonable take on interest rates, but this drowning mortgages part, like we just talked about how high inventory is, how many would-be sellers there are. They're not slashing prices to sell their homes. Prices have generally held up because sellers aren't particularly distressed right now. The mortgage arrears rate in Canada is still 0.22%, not 0.2. Yeah. Mortgagers, while, there's a lot of renewals coming up. Again, last month we talked a bit about that. But generally people can afford their renewals. So yeah, there are some tough mortgage payments out there and some people renewing it at higher rates, but 2/3 of Canadian borrowers have fixed rate mortgages. So a Bank of Canada interest rate decision doesn't directly affect them anyway, only at renewal. So all in all, it was a pretty decent article with, in my opinion, a poor headline choice.
Yeah.
Okay, so the last one we have a listener question. I believe Lee from Langley has a question for us.
Hey, Ryan. This is Lee from Langley. I know summer's usually a quieter time for real estate, but with interest rates holding and more listings on the market, do you think this could actually be a good time for buyers to make a move before things pick up again in the fall?
Oh, great question. Amy, why don't you take that?
Yeah, I mean, to answer Lee's question, 100%. It is such a buyer's market. If you are in that position, you have a plethora of inventory. Timing is on your side. You're not pressed and competing with other buyers. Pricing has leaned off a little bit. And sometimes you might find that little jewel that's, priced below because of whatever their certain situation of why they're selling. So you could, there are deals to be had.
Yeah, and there's certainly a lot of inventory out there. There's less competition, although sales have picked up marginally. So yeah, I think there are, like to your point, a lot of opportunities. And for somebody who's, been thinking about this for a while, if you have all your ducks in a row, you have your pre-approval, what your financing capabilities are, what you can afford, there's a much easier buying experience out there right now than when the market's in a total frenzy.
I think it's all about the buying experience too. Like when you're not in a hot market, you're not making rash decisions based on timing and you're competing, which elevates that experience for you because nobody wants to lose in a multiple. At the same time, you don't want to overpay. So the timing's on your side and just the choices. You have so much more choices.
Absolutely.
So yeah, I absolutely think it's the best time to get into the market.
And with that, thanks so much for everything today. I really appreciate the conversation. And if anyone listening wanted to get in touch with you, how can they do that?
Yeah, you can get in touch with me. I'm at Brentwood Block by Grosvenor, or you can send me an email at achan@rennie.com.
Awesome. Thanks so much for your time today.
Thanks for having me.